Hello, Vijay.
Hi, how's it going?
Very good. Thank you for joining the podcast today.
My pleasure, Monica. Thanks for having me.
Yes. Okay, so let's get kicked off right away.
Sure.
I wanted to start off by talking about how did you get into the world of startups and what led you to this book, The Funding Framework?
Funding Framework, yes. So how I got into startups is almost like accidentally. I was interested in everything that was happening with the new web and internet when I was in high school and college in the mid to late 90s. And it was just such a great time because there were so many like new things happening, new companies being started and things like that. And then I had the wonderful opportunity one summer to work at a venture leasing company. So back in the day, if you wanted to start an internet company or a website, you had to have a server and to host it. And these things were expensive. There was no cloud. There was no place to get it hosted. And so you basically had to buy these servers and we would lease them and so forth. And so I had to understand the credit on both the asset and future potential side of companies that had no profits. And I thought that was like fascinating. And from there, I got to work in a marketing agency in New York working with startups. Fast forward, I started a company in e-commerce and then started a fintech studio and incubated a number of companies, and including one of the first digital banks for small business. And then from there, worked in venture capital for 5 years with 500 Global. And so it's been a journey of starting companies, investing in companies, supporting them, but overall being a person who is of service to entrepreneurial leaders.
And so you've been on each side of it.
Yeah.
What's been your favorite side so far?
I think being on the 0 to 1 like stage as you're solving a problem, you're like studying new things, you are trying to understand what are the new opportunities that are out there and what is it that customers will actually care about, pay for, sign up for things. It's a puzzle, it's a problem. And beyond that, there are these moments where you as a leader stand out, and those are really 3 pivotal points. It's raising money, it's like founder-led sales, particularly in B2B context, and also it is like the building of teams and understanding like how to gel. And we have to be the best version of ourselves in all those cases as leaders, and also that's where companies start or break.
Yeah, no, I think that's one of the most fun parts of being a founder or starting a company is that there's just so many aspects to it and you have to learn every single aspect and get good at it.
Absolutely.
Which is why this book is so amazing.
Thank you.
Tell us a little bit more about the funding framework and what led you to write
the
this.
funding framework started because in my role at 500, I was helping a lot of our founders to raise money. And they were typically pre-seed or seed stage rounds. And this was in the market of 2022 and 2023, where there was no room for being an okay company. Interest rates were going back up. Financial markets were shutting out off the IPO pipeline. What that meant was that you really needed to stand out. And that's where I'd have a lot of people who would ask, hey, who should I talk to? But who is maybe not the wrong question, but it is not the first question. The question is like, what is it that makes us special and differentiated? And then who are the right investors for us to be partnering with? And so the funding framework takes what people think is serendipity and luck and really makes it about systems and processes. And so those processes look today like starting with storytelling, subsequently thinking about organization, having all your ducks in a row, being able to have a great outreach. So you're thinking at a thesis level, who is a great fit for our business as far as investors or institutional or angels are concerned. And then fourth, like closing and aggressively managing the close of your round, because that's your job and not that of your lawyers or investors or anyone else. And some of these things are counterintuitive. Some of them make sense, but people still don't do them because it seems like, oh, that'll take care of itself. So like any skill, whether it's hiring or sales or something else, you've got to try and master this. And the good news is, just like there are some people who are wonderful at selling through experience or training, or they have experience with hiring and because they've seen what good looks like, you can both see and experience and learn what great fundraising can be. And funding people and your go-to-market being 3 key parts of the startup system, I think it starts here, and that's the genesis for writing the book.
Yeah, no, I love it. I wanted to start off maybe talking a little bit about the first part of your book, which is storytelling. And I think that's something that in our last conversation as well, you emphasized a lot to me is the importance of storytelling, especially when you're giving a pitch. How do you actually activate the emotions of the listener and put them in your shoes or your user's shoes of what you want them to understand? And so for storytelling, how do we best use storytelling when we're pitching? Because there's so many different stories to tell, but what is the right story for us to tell here?
Yeah, what is the right story to tell? The stories that resonate across civilization, across history, are stories that follow their hero's journey. And whether we're listening to a biblical story or one from mythology or Harry Potter or Star Wars, all these stories are the same. They start with somebody who experiences adversity. Someone comes into their life and is a guide or a helper that helps them overcome the great challenge and test, simplifying here. But then they experience some great trial, they overcome that, and then they go back to their old world, but a little transformed and better. And whether you're selling enterprise software, whether you're selling a service to people, they need to feel like, oh, this is what gets me back to what I really wanted to do. This is the thing that helps me. And telling that story is important because people need to know what's going to happen next to the protagonist. And too many founders start by telling their story. So I went to this college, I got this PhD, I worked at this company, then I worked at this company, and then I got together with my co-founder, and then we had this insight, and so we're building this thing because the market's very large, and we've got like 20 years of experience, whatever. The story's about them. And it's not about you. The great entrepreneurs are customer obsessed. And so when they can tell a story that reflects how emotionally invested they are in their client, their customer, whomever, it comes to life. I hesitate saying the word user because I really don't like it. The only other industry that talks about users are people who like sell drugs. And I think we care and respect our customers, clients, folks that are members or whatever, like beneficiaries of consumers on our platforms. That's where it comes together. And then that's where even if you're an investor and you don't know anything about this and maybe you can't see yourself in the shoes, you tell a great story and it comes to life and they can see themselves maybe or someone they know in the shoes of the protagonist who is your ideal customer profile, and that person is successful and gets to the next stage. And this, of course, works in go-to-market types of sales. It works in understanding whether the people you're going to join really care about that mission because they feel it a little too. They feel that they're emotionally invested in what's going to happen, because making these types of decisions aren't purely rational or economic or based on a bunch of math penciling out. It is based on conviction, and conviction comes from that deep feeling as well as like the left side of the brain concluding logically that this is something you want to do.
Yeah. One of my favorite parts of reading the book is that you just weave the storytelling aspect in so well with Maya's story, because I felt like I am Maya, and I am the customer profile that you would be targeting as well. So just seeing how you weave in that storytelling using Maya and the way that I felt as I was reading about it, and the kind of the empathy that I felt towards Maya, but also the similar experience, and this is how I can improve on certain parts. I felt like that was just so perfectly weaved in, and I'm sure a lot of founders who will read the book will also learn a lot from just the way that you use Maya as an example.
Thank you. Yeah. So how many business books have we opened and we get 10 pages in and we're like, I get it now, I can put this away. Because you want to know what happens to her. And how she gets to that, like, get past the 90% of people who will never see a term sheet and actually weave her magic and put her story together and the other steps that follow in the book.
Yeah, no, I love it. I wanted to maybe talk a little bit about the raising part, right? Because a lot of folks often ask, what is your market size? What is your TAM SAM sum? That's the standard question, right? But for each industry, your TAM SAM sum is going to look a little bit different. For each sector, it's going to look a little different. How do we best think about something like market size? And what is big enough for a VC?
I think $10 billion as a TAM, as a total addressable market, is probably where it has to begin. So other people will say, hey, it needs to be billion with a B. Depending on the fund size, how big they need that market to be has a lot to do with what it takes to return their fund. Now, I know a VC from a famous firm on Sand Hill Road that says, I can't invest in any company that isn't going to be worth at least $20 billion one day. Which sounds crazy, but it's not if you assume, okay, they need 10% ownership, that's $2 billion when the company is at a liquidity event, and then that will be 2 times the fund that they're raising, which is $1 billion, right? Just simple math. But that's the scale some people are thinking about. So different investors are going to have very different expectations. The story you want to tell and the thing you want to be shooting for is either because the market is big right now, or we're creating a new category because it's growing so fast, we're going to be valuable at that level because somewhere downstream, someone else has to believe in what we're doing, and that will necessitate the downstream capital thinking it can get to that stage. So today, you probably are thinking, oh my God, I need to get my first $1,000 and then $10,000 and $100,000. Startup founders are in the business of adding zeros to their sales, and that's what makes it super exciting. But that's also like where someone has to believe this is going to become enormous later. At the earliest stages, market size is a red herring sometimes, because you might say, oh, there's no market for this because we can't imagine what the market for something is. The famous example is always rideshare, where people thought, what is the market for Uber or Lyft? Okay, I guess it's like the equivalent to taxis. Of course, it expanded the market for transportation and created alternatives to car ownership, even public transit and other things, and of course, delivery. So you look at that business today and you say it bears only partial resemblance to taxis. That said, you've got to show the proof of work, as they would say in crypto. You have to show the evidence of this is what's possible and this is what people believe. Whether you're creating a new category, or you're taking an existing market and you're saying the consumption is going to go from doing this thing to doing this like new thing.
So it's almost like a hybrid where you're both looking at what is the current markets, but also what is the vision of the future market size that you have to sell to the investors.
Yeah, exactly. So that's why I say in the book, you either have to describe a large market today, and you have to describe whether you believe the nature of that market is winner take all, at which point there will be 1 or 2 players, maybe a third, participating in it in the future, or whether that market is tiny but growing explosively, such that we don't know how big it's going to be, but there's out of nowhere people participating in something they haven't done before, and you are running a series of experiments to validate that it is both a large and valuable market in the future, hence you'll build what you'll build.
And I think the natural next step to think about is, for this market size, would the incumbents be able to take something on like that? And how do you differentiate yourself from incumbent? Why wouldn't the incumbent, who has already an existing market share, who is already doing so well, be able to just tack on a technology that you are creating right now? What are ways to kind of think about that strategically?
Yeah, that's a very relevant question today, particularly when you look at what the large language models and different foundation model companies are good at and what they're not good at, and what's on their roadmap, and knowing, hey, they might release an update that makes the thing that you thought your product was really good for kind of obsolete. Early on into Gen AI, we were seeing companies that would help you with writing. It turns out that as ChatGPT and Claude and Gemini and whatever other ones you like have gotten better at writing, you don't need a standalone product to do that. Alternatively, we've seen there are some things that are harder to do, and that can be like where there's a particular like vertical and specialized knowledge, and not a large language model, but a little language model, or a RAG sort of concept is better. And so perhaps in legal or in medicine or in some of these other fields, the training data needs to be both more defined. And also the way in which people access it, that UI and UX has to be so customized and fit into the way they do work that they're like, it's too much of a hassle to go to this general like thing. Hence, I want a book on the national parks. I don't want to go to the encyclopedia and pull out that volume and just see something that's written at a general level around that. Because that doesn't mean people stop caring about the large language models. It means like when there's a specialized and useful thing on the task, and like maybe you have that travel book that
Yeah.
then says, okay, great, here are a bunch of awesome routes or paths or trails that I can follow for my next trip to Yosemite. That's really cool. And now I have something that's like really useful. So we like to joke in vertical AI, which is what our studio is focused on, GAI Ventures, the vertical comes first. And so it's what generates amazing outcomes that are transformative, and the final result is demonstrably better than where you started, kind of like the hero's journey, that that necessitates something separate existing. So I think that's what's happening today, knowing that yes, OpenAI and Anthropic and Google and XAI, whoever can like build whatever they want, they may not be good at a particular specific thing. And also the market might not be big enough for them to go after that. What do I mean? Like now these companies are getting to a certain size for, let's say for Meta or for Google today, a product with 50 million users is pretty small, right? It's not going to move the needle for them, but that is an amazing business for a startup to build.
Yeah.
And similarly, you could build a company just shy of $100 million in revenue, and it still might be too small for some of these big AI players or hyperscalers or others to pursue, because they're trying to allocate capital into things that will be measured in the billions. They might want to buy your startup one day in order to get there.
Yeah.
But I'm confident of that like separation starting to become more and more the case.
Yeah, and that's something that you mentioned in the funding framework as well, is if you are able to focus on a specific niche, then maybe that big company is not going to target that specific niche because it's not big enough for them.
Yeah.
That could be the starting point.
Yeah, and that is the part of the innovator's dilemma, is that big companies are not incentivized to innovate because they're trying to protect and extend existing profit pools, cash flows from their businesses, rather than disrupt those same businesses or build things that will reallocate resources to something that seems puny and small. Which I've experienced firsthand being inside a large organization, as well as like working with founders who are building things where everyone's like, couldn't X company do this? And it's, yes, but they're not motivated to. And who knows if they'll be any good at it.
Yeah, that makes a lot of sense. So selfishly, I'm going to ask a question since I'm in the medical space and the digital healthcare space. There's a lot of companies out there that are already on the workflow automation, kind of admin automation for digital healthcare. I wanted to first understand what you see as the outlook of these areas, since there are a lot of companies who are playing in the space right now. And for a lot of the companies who started in like the 2022, 2023 time period, they've already grown to a certain amount. So for newer startups who are trying to enter the space, you have recommendations.
So medicine is one of those strange markets, because healthcare, because of the payer and provider and patient or consumer being like totally different entities. And while they're different, their interests are not aligned. And so I think having a business where let's say you could be a digital health business, in which case you don't care about insurance and reimbursements and things like that. And you're not thinking about like HIPAA and FDA trials and things of that nature and clearances. Like that can be one path. And I've seen successful companies emerge there. But I think the thing between payers, providers, and patients is today, if we can think about how do we reduce costs, you have people's attention. If you reduce costs, reduce procedures, reduce waiting times, basically that is the great challenge, is we have this cost curve for healthcare that is out of control. And on the workflow and the administrative side and all these things, there are a bunch of low-hanging fruit still out there that people can take care of and address. I think after that, once you address the cost curve, then you're trying to improve outcomes. And a lot of that is still going to come from personalized medicine. It's going to come from taking the data that exists in the world of medicine and using it in different ways. The challenge, of course, with that is the duopoly of EMR between your two big players, Epic and Cerner. And I think future portability, healthcare, I'm not a healthcare investor, but friends of mine who are optimistic about our ability to use our information, our data in new ways, and then for people to get the benefit of not just their local doctor, but perhaps a healthcare provider somewhere else who can get them started on their journey and provide them with greater resources and direction. So I'm long-term optimistic about healthcare. I think it's going to require first addressing costs and later addressing data in order to create better outcomes for everybody.
Yeah, that makes a lot of sense. So one of the things that you talk about in the book, and given that this is Startup a Nation, is there's a lot of government opportunities out there as well, and government grants. And I think that the institutional investors and government that you talk about who want to foster the technological developments in particular regions was a really interesting concept. Could you expand a little bit more on that, and what type of startups should be the ones who are pursuing opportunities like that?
Yeah, the government is the biggest healthcare customer at the end of the day, between CMMS and also the other ways in which the government procures and pays for healthcare. So I think as a customer, the government is super important and decisions it's making are relevant. It has historically underutilized its purchasing power and influence. We just saw, I think, in the last day, the administration announcing a deal with Merck to lower the cost of IVF drugs. This is something I've been watching for some time, and originally the idea was 20 years ago, but it's that, hey, Medicare and Medicaid should negotiate drug prices. And people said, no, this will be bad for innovation. Pharma said that, and members of Congress on their behalf echoed it. Separately, then the VA comes along, and then they're like, well, yeah, we're going to negotiate drug prices. So at some point, the cost of drugs and the cost of medical equipment and devices and procedures get so high that the government is buying more and more of these services and pharmaceuticals that they will end up having to buy. So I think, what does it look like in a world where the government goes from members of Congress sitting on their hands and saying, oh yes, we've got to do more to low prescription drug costs, to more drugs coming off patent, more generics, more competition possible, and then also negotiating down drug prices like other countries do, because it's just gotten to a point where this is like a bigger and bigger chunk of GDP because of the inflation in that direction. I think the government personally doesn't do enough to regulate price gouging on certain drugs, where a great example is Revlimid, which was not very expensive when it was a drug for leprosy, and now it's a drug for cancer patients. And as ProPublica has researched, now that it's a cancer drug, they can charge thousands of dollars a month for it. Whereas when it was targeting a small market, and one where you don't have the desperation of cancer patients to get those kinds of drugs. So that's a specific example where there isn't, I think, enough regulatory action, considering like who's paying for that. It's probably in large part Medicare. So I think we have more opportunity to go. The capitalist in me doesn't like price controls, but it does the ability of buyers and sellers to come to the table and negotiate better prices where you have a market failure, which is what has seemed to happen here.
What do you think is a startup's role in the midst of all of that?
Yeah, I think transparency, access in terms of opportunities to buy the things that we need. I think where we're looking at these regulated substances which are not distributed widely, I think like startups can either intermediate or disintermediate like someone. And I think whether it's on the pharmacy benefit manager side, whether it's in terms of the access to local care and services where you just need to like see someone and you don't want to wait, you can open up like markets and give people access to both care as well as the in this case products and services, whether it's prescription drugs or something else that they don't have. I think so. The question is like, who pays for it? Right. That's always a question in healthcare. We come back to that payer, provider, and patient trilemma, and that is the thing. Like, does the government encourage more of this by stepping in and saying, yes, we're going to pay for it because we think it's going to be less expensive than a trip to the doctor to access this digital health product. We think that if people like shop around for both like treatments, they can find like the out-of-pocket costs for something, but they might get that care sooner, and it won't necessarily have to go through insurance and government and cost society more. Like there will be things that government could, in theory, encourage or promote, as opposed to perhaps regulating and instead protecting the status quo.
Yeah, and one thing that I really liked about what you said is startups can try to find ways under the existing system to creatively navigate it and find ways to give patients better access.
Yeah.
I think that's something that a lot of startups are doing right now, and it's really amazing to see the progress we've made in healthcare. Now there's so many alternative options because of all these startups out there.
That's right.
Vijay, you have been an investor, you're still an investor, you are an author, you have been a founder, you've been in every aspect of this ecosystem. What is next for you?
Yeah, so building more companies with GAI Ventures, which is a venture builder where we help bring together people, product, and pipeline for new vertical AI companies in financial services, commerce, and enterprise productivity. And also in the spring, I'm going to be taking some of these lessons around the fundraising and people aspects as well as go to market. And I'm going to be sharing that in a class at Berkeley, which I'm really excited about.
I love it. And one thing I love about you, Vijay, is that I think you're really trying to democratize the resources that you have to the founders out there. So this book people can find on Amazon. The digital version is only 99 cents. And I know you've also created like an AI version of yourself where people can ask questions. Can you talk more about like the Vijay resources for the founders out there?
So yes, the ebook is out there as I'm trying to make it as easy for anyone to get a hold of. Yes, there is my digital twin, which is at AskWisely /Vijay Rajendran. And then, there's also my Substack, which is a startup system at Substack, which kind of has my musings and writings almost every week.
So we'll put all of that link in the Spotify and YouTube below. And last question, what are you most excited about, Vijay, right now?
What I'm really excited about right now is the world in which we're entering is really scary in some ways, right? We're seeing fewer jobs for new graduates. We're seeing the AI do more things that we thought people did. But I'm optimistic because I see so many smart people working on challenges related to climate, related to health, and related to the way we work to get people to do the things that they care about and love. And so I think we can see a lot of stormy clouds on the horizon, but I also see a lot of like positive and resilient things in the foreground that are probably going to get us through whatever like big social changes and environmental like challenges we have.
I love the optimistic mindset. This is awesome. Thank you so much, Vijay, for joining us today at Startup in Nation.
Yeah.
And please get this book if you are a founder. I have found it to be personally very helpful. And I think especially if you're a founder in the early stages, trying to understand the entire system is incredibly difficult. And there's just so many different nuances that I think Vijay captures really well here.